Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for your daily cryptocurrency market update video. We have got some really interesting things to reveal in this one. The cryptocurrency market has been rallying since the start of the year, but who is behind it? We're going to do a bit of investigating into exactly that. As we largely see whales somewhat distribute, we know there is a lot of retail behind this rally, and Bitcoin keeps coming up and trying to pierce above that 25k level, but it is struggling. So do we need, and this is very often the case, sometimes you need the a kind of flushing out before you then take it with confidence. Is that on the horizon? And actually that would be very healthy structure. We previously drawn a head and shoulders, and we did express our concerns that maybe the neckline has only just been met and that this was not your right shoulder. It's still a possibility. TA, guys, is not a exact science, in case you haven't figured that out by now. But the cryptocurrency markets have been rallying on the backdrop of other markets readjusting to interest rate pricing or implied interest rates on ever-changing inflationary data. So it doesn't really make that much sense why the market has rallied in accordance or against a strong dollar that, of course, has caught a bid as a result of interest rates getting repriced. You know, if you look at it from the start of February, the dollar's gone up and the stock market and the likes have came down. So it's going to be an interesting day today because, of course, the stock market was not open yesterday. The futures market is relatively down, but we will see. Gold is down, the dollar is up. We'll see what progresses. However, the cryptocurrency market has somewhat been dancing to its own beat recently, but we will look at all that and scenarios that we are looking at moving forward. This was an interesting article that I don't think many people would have came across. It was from Barclays, and it's looking at SMEs, so small to medium enterprises, more upbeat about their 2023 prospects, despite uncertain economic outlook, Barclays goes on to say. It talks about a number of things. This comes as data from Barclays Payment, which processes £1 in every £3 on credit and debit cards in the UK. Cards shows payments to SMEs grew by 3.5% year on year as business enjoy a full first quarter free of any something demic restrictions. So there are some really uplifting and positive data points coming out in regards to the economy. And I can't help but feel like we're all expecting doom and gloom, right? And with that yield curve to play out. Well, the problem, and we all saw this with like Plan B, Stock to Flow, and all these other on-chain analysts, is there's always a first time something doesn't follow suit. And I think that this time potentially would be the best time to not follow suit, given the fact that we've never gone through lockdowns and a kind of episode that we've previously gone through for the past 2 years. I mean, China has just reopened. They're already pumping an absolute bucket load of liquidity back into the markets. I think it was to the tune of $90 billion. Also, big news yesterday, covered it in my daily news update. They did indeed, or have looked to allow and somewhat softly backing Hong Kong's involvement in crypto trading and allowing their customers to do so in a regulated manner. Regulations are coming, ladies and gentlemen. It's actually a bullish thing, in my opinion. So let's get into it. This was interesting. So looking at who's behind this rally, this is the highest calls in terms of interest that we've seen for the past 3 months. Okay, so this is certainly interesting. This comes on the backdrop, and we've already shared this chart, of retail investors piling into the stock market at the start of 2023. So we know that also this is going to probably look largely similar for crypto. There is, however, institutional, through the likes of Grayscale's BTC, interest, and you can see this in another of other funds and firms. And actually, this was from Jim Bernanke yesterday. Everyone is bearish, right? Well, not this measure. The bottom panel is the net bull-bear spread. So when it's green, bulls are in charge. When it's red, bears are in charge. It now had the consecutive positive week, the most positive reading since the SPY all-time high in January 2022. So isn't that interesting? Is there a larger change into the markets, or are retail just being suckered in, ready for the yield curve to play out, which would send all markets into a downward spiral? Anybody that's interested in joining my group, this is all accounted for, and we're looking at hedging all outcomes, but still not being sidelined. Remember, we got back into the market on the 5th of January, which at the time was not an obvious call down here, guys, and have done very well from the crypto space as a result of that. So if you want to find out more about that, please feel free to do so. And you've got to remember, this rally, certainly the one from the 1st of January, Bitcoin kind of stuck to the sort of accordance of the other markets. You know, if we upload the S&P on here just to be, you can see that February the 1st, as rates started to adjust in terms of implied rates on the back end of higher inflation and worries that inflation was going to be higher and thus cause a tougher Fed. Remember, the Fed is speaking tomorrow, guys, on Wednesday. Markets look to sell off. Certainly the SPY, you know, you can see this very, very prominently in the likes of gold. Obviously, this is the SPY overlaid. But Bitcoin initially started on that route and then reared its head. And actually, I think this had a lot to do with regulations and the SEC going after certain people within the industry, because it gives the industry a lot of credibility. And you've got to remember, there is still quite a bleak macro backdrop. This is shares of outstanding subprime auto debt that is 30 or more days delinquent. You can see a huge rise here within that to sort of 2007 levels. And there seems to be a lot of data that coming in at sort of 2007 levels, which is kind of scary, really. But, you know, we've taken a position back in the cryptocurrency market. It's been the right one thus far. And hopefully long may it continue. Now, let's move on to some technicals for Bitcoin, do a little bit of recapping on where we are at, because we essentially looked at this as a potential head and shoulders. Okay? And we said this is perfect because this is your weak right shoulder. This is your kind of, this is your left shoulder. And this, of course, is your head, right? Now, we did say, and I've got to be very, very cautious to this, because it would imply that there is still yet a right shoulder to be formed, that this was not perfect head and shoulders structure, right? You've got this very messy left armpit, but it's not out of the realms of possibilities. You know, the structure, the sort of pattern is there. And we did give targets of this that would send you, depending on whether you're looking at a log or off log, to around about, you know, 34K all the way up to 37. Now, there is the possibility, and this would be a lot more of a clean, not if I draw it like that, head and shoulders, that this may be your right armpit. And you're still yet to get that deeper correction for the left shoulder. This is all scenarios we've looked at previously and are looking to play, essentially. Certainly in the form of loading up down if we can get somewhere here, just like we loaded up here, guys, right before the CPI. Anybody who doesn't believe me on that, feel free to join the Patreon and find out. But this would be healthy, this pullback. And it would have bears thinking they're back in control, get them on the sort of short side again after being wrecked recently. I know some big Twitter accounts, and I have personal information on this, that pretty much blown up their entire accounts just through this period here for a couple of months, being too aggressively short. And this is the thing, there's not an established uptrend here at the moment, but you're also kind of putting this whole trend into question, just like we did at the start of the month when we looked at things like the RSI and said, look, you've got to take this seriously, this divergence, just like you had to take the bearish divergence seriously. So this is largely what we're looking at moving forwards. The question is have we got the neckline right, and do we start to envision and make that journey upwards back to 30K plus, or are we about to form a right shoulder and sort of incorporate this structure here as part of the head, and then look for that upside, which is going to take you well above, sort of back into these ranges or this sort of void of price action here. Certainly something that I'm looking out for. I think it would be very positive for the cryptocurrency market. You got to remember that the cryptocurrency market may do this on the backdrop of the stock market not particularly doing too well. You know, it's already broken out in regards to the SPY. And actually, you've got to remember that crypto is an emerging technology, right? It's an emerging market that is yet to come to fruition and is yet to have trillions and trillions of dollars thrown into it. That is all coming in our lifetime, ladies and gentlemen. You know, to the tune of tens, maybe one day hundreds of trillions, depending on, you know, if everything ends up getting tokenized. So it may do exceptionally well, regardless of a sort of negative-ish backdrop. But of course, those macro factors, it should have been a lesson to everyone last year, will not go away and are certainly things that we're monitoring on this channel. But very interesting how we have a lot of actual involvement in this rally, more involvement than we've seen for a long time. Also interesting that it's doing this on the back of market sort of repricing and interest rates and selling off. Real question today is going to be, how does the US market open and how does the dollar do? The dollar's at sort of this resistance level here. You get this sort of action with the dollar, everything's going to go like that. You get this reaction, it's likely that things are going to go like that. And Bitcoin, I don't think is going to be able to keep its head above the water for that much longer, given how much it's done without the support of a weak dollar. And this may be this right shoulder that we end up getting formed. On that note, guys, I'm going to love and leave you. Hopefully this was a short and sweet enough daily cryptocurrency market update. If you've enjoyed the content, like us, was appreciated, so as a comment, and I'll see you all in the next one. Thanks a lot for watching, ladies and gentlemen.